Good morning, everyone. How are you doing today? Michael Zuber, author of, yes, One Rental at a Time, the 15-year journey from a single house to financial independence. And yes, I am a landlord. Yes, I'm a California landlord and here to help you understand what it takes to invest in real estate, be a landlord, earn your way to financial freedom. And we always do these daily financial news because it is something I've been doing for 20 years, getting up early, trying to figure out what's going on. I firmly believe if you can understand the consumer, understand the cost of capital, that you can make good real estate investment decisions. I tried my hand at the stock market 2 decades ago. It went well until it didn't. I've done several videos on that, how I turned 7 grand into 200 grand nearly and then lost most of it. But I am a real estate investor, and one of the reasons I'm a real estate investor is it moves slower. In real estate, you can really see the trends coming, and most importantly, you can see the inflection points if you are paying attention, if you are not emotional, if you are not tied to your past decisions. So one of the things I will do later today is create a video about San Francisco, Las Vegas, and New York, basically kind of summarizing my thoughts. I've been thinking about this for about 24 hours. What, if anything, has changed in those real estate markets? Just because I think if you can relate to Las Vegas, San Francisco, and New York, it may shield or may hide or may point to things that are going on across the country. But today, this daily financial news, it is really about what is going on today. And then there's one more announcement. Many of you have asked to do kind of a question and answer kind of real estate meetup. I do have a show every Saturday at 8 a.m. if you do not know. It is 100% based on questions. I don't advertise it a lot because I forget. But you can count on a show 8 a.m. live right on YouTube, right on this channel, where we go through questions. So you can kind of book it. It'll happen. I just hit live and we go. But some of you want to talk after hours or at different times. I have a 5 to 6 Pacific session next Monday. I did a video introducing it yesterday at 6 p.m. You can go check it out. It is, again, a real estate meetup, questions and answers oriented. First, go ahead and register, submit your questions. It'll be a good time. But lastly, if you are a part of a real estate meetup anywhere in the country or frankly the world, I would love to do more and more of these. We are heading into the winter, lots and lots of people staying inside. So if you are part of a real estate meetup and you want to ask landlord or investing or cash flow questions, reach out. You can leave a comment below here, maybe DM me on Instagram, and we can go for it from there. So just know that that is there. I think what we're seeing in the stock market, again, it moves much, much faster, is maybe what people are going to be calling the great rotation. We have been in an environment the last 7 months where kind of everything went right for the big 6 or 7 tech stocks, Amazon, Facebook, Alphabet, Apple, all of those. And, some of that is being unwound. We are seeing kind of a growth versus value kind of price discovery. I would expect this to last a little while. The PE ratios, price earnings ratios, got stretched to all-time highs if we look at the numbers. It's not that these tech stocks are going to stop growing or stop being profitable. It's just the story has changed for value, right? Where what we didn't have Sunday that we had Monday is we had a timeline, right? We now say, sometime in March or April, the vaccine is going to be coming out for the most at risk. Then we're going to have options for the rest of the country shortly thereafter. And that is a key point to getting past this and getting back to normalcy. Now, normalcy does not mean 2019 kind of earnings and things of that nature, although I have seen some people forecasting S&P earnings for 2021 above 2019. That's aggressive, but maybe. Let's hope so. But again, it's a great rotation. Stay-at-home stocks, right? Are we going to go back to value or whatnot? So I think that's going to continue. If you look at the indices, I think the NASDAQ suffers while the Dow does okay, which is interesting, right? The Dow is 30 stocks. But I just think if a lot of people look at the headlines, I think those are interesting. Uh, McDonald's actually released earnings yesterday, but I skipped it because of the great information and I was pretty excited. Uh, I think they had great earnings. I think McDonald's is really showing that they're investing. They are looking to get stronger and more diverse coming out of this. They are going to meld kind of the digital experience, which really Chipotle kind of leads today going into this crisis. They are going to really invest there. They're going to go more drive-throughs, multiple lanes, and they're even investing to take on competition, which is something I proposed Sunday, right? Are they going to do? And they're going to come out with a McPlant based lines of food, which is interesting because that will tie into what we talk about beyond meat later in this episode. But again, McDonald's is investing. They are getting bigger. They've already expanded their breakfast line because I think mom and pop bakeries and coffee shops are in trouble. So again, McDonald's is getting bigger. Something that is very interesting to watch. We saw huge pops in cruise line and airline stocks yesterday. And what do we have today? Well, we have companies that are suffering and they are issuing more stock already today. American Airlines is coming out with more shares. Carnival is coming out with more shares. So they are taking advantage of the pop in their stocks, and it is going to be dilutive to common shareholders, but they are trying to get to the other side of this. And frankly, it's the right thing to do, issuing shares versus take on more debt. Yes, my puppy is in my lap. Thanks, Jeffrey, for asking. Another rough night, but he's in my lap, so let's hope he's quiet. So again, these companies should be doing this, and I would expect other airlines, hotels, REITs, people are suffering, so I would expect people to issue shares, not debt, right? If you can issue shares, why issue debt? Next up, looks like Ulta Beauty has struck a deal with Target. This is something we actually talked about 6 months ago. Will these big retailers kind of sublet space? And they are looking to give Ulta Beauty 1,000 square feet in Target stores. Ulta Beauty has basically been online in distribution, but now Ulta Beauty has a relationship with Target. And these are things that is going to change going forward, right? The consumer, what they want to go get. It is interesting what is going on, and I expect that to happen more. We actually talked about it on this channel 6 or 7 months ago as something I thought was very likely. It actually might have been 9 months ago because I think we talked about that before this health crisis. So nice to see that's going on. Don't know if you saw this, but the EU has launched a first and second antitrust case against Amazon. The EU this year has been more aggressive with tech companies filing antitrust, basically saying that Amazon is using seller data in means that are not fair. And basically the fine for this could be up to 10% of gross revenues. So again, not saying it will be, but when you read what is possible, that's a pretty hefty fine. So again, Amazon is fighting this as you would expect, but I would expect the fine to suddenly spit out the other end at some time in the future. AMC Theaters is in trouble, although yesterday had to feel like a good day. I think their stock was up 80%, right? They have hope, right? There's a bridge, right? Going into Sunday, it was a bridge to nowhere. Maybe now it's a bridge to somewhere. But man, their numbers, 97% fall in movie theater attendance. 97. Why are you open? It's got to cost you more to keep them open, right? No blockbusters from Hollywood. It's got to be tough. Got to be tough. One thing that's interesting, again, we talked about this on this show, I think 2 months ago. AMC and Cinemark pioneered private watch parties. Again, why, rent a theater to an entire party. They have sold 50,000 of these since they announced. I think that's certainly not going to replace the revenue, but it's got to feel good, right? 50,000 watch parties, right? You and your 50 or 100 friends come watch a party. That's got to be fun. DR Horton came out and beat top and bottom, which most importantly to me, and again, beauty of the show is we talk every day. I talked about this on Saturday about the week ahead. Is D.R. Horton going to pull a Pulte? Pulte Homes, again, beat earnings top and bottom, but they slowed development because lumber prices. D.R. Horton not going that direction. They are plowing ahead, building more. They upped full year expectations and upped their dividend. So D.R. Horton is stepping on the gas where Pulte pulled their foot off. Interesting approach. We will see where this goes. Advanced auto parts beat top and bottom as more and more people take care of the cars. But they didn't give the guidance that people were hoping for. So the stock probably is getting pressured today. Beyond Meat had a horrible quarter. They missed significantly on revenue and earnings, like significantly. Unexpected loss where they were expecting a profit. And interestingly enough, while Beyond Meat was a partner with McDonald's on their experiment with plant-based food, McDonald's is not committed to using Beyond Meat. Hence the name McPlant, right? Beyond Meat was hoping that McDonald's would use their brand. Clearly not happening. And near as we can tell, there's no partnership other than the test in Canada. So it's possible McDonald's goes a different direction or perhaps develops their own competitive product, I guess you would call it. Simon Properties reported horrible miss. 48 cents versus expectation of 90. The big one for me is rent collections. Rent collections across Simon's Properties, which are supposed to be Class A. Class A is 78%. Simon Properties is saying some of their big national retailers are not paying. And these are retailers that are supposedly healthy and in this. So it is interesting to see that they are 78% collected. It is very likely that they are going to have to reduce rents and things going forward, sign new leases. Norwegian Cruise Line came out yesterday and said because of the vaccine news, they saw a spike in second half 2021 cruises. Again, you would expect that. It is interesting to see what is going on there. For all of you, the software and cloud-based stocks, you got to be concerned about what you saw from CyberArk Software. This is a software stock in the cybersecurity space. And having been in that space for quite a while in my career, it is, how should you say, it's one of the places companies even invest in bad economies because cybersecurity is that important. To see that they missed on revenue and gave a weak guidance has to be a red flag, in my opinion, for software and cloud-based companies. Again, if a cybersecurity company misses and then lowers expectation, that would not leave me all warm and fuzzy. So that's something that people are going to have to evaluate going forward. And then the final thing to talk about is, I don't know if you saw this, it's a big move, something I'm watching, it's going to force the Fed hands, is the 10-year note almost at 1%. Now that might not sound like a lot, but you got to remember where we came from. It was in the low sevens just a week ago. So to see a move of, what do you want to call it, 25%, that is eye-opening. And that is important because that is where kind of the debt structure starts, and the Fed is going to have to pay attention. If the economy opens up and we come back raging, which is very, very possible, inflation could be the boogeyman. I did a video on that yesterday, and we could see the Fed have to raise rates to fight that. So none of this whole 3-4 years with no rate increases. Stuff to watch. Very interesting times. All right. Again, daily financial news is for you. This is not clickbait. We talk about important stuff every day. We are not here trying to feed the YouTube algorithm and make clicks. So if you like this, subscribe, thumbs up, and of course, have a wonderful, wonderful day. Take care.